Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in this live stream, we're going to start by talking about the US dollar, what the market is doing so far, and looking at the current price action. If we're using the Fibonacci from this high to this low, you can see that this key level right here is our extreme premium zone. If we were to see any sort of rejection or reversal in the marketplace, I will be anticipating for that to happen from here after a run on buy side liquidity. And so far, price has taken that buy side liquidity. The next thing we're anticipating to see, if we're bearish, would be for a potential displacement to the downside. Thank you so much for your confirmation. Yes, I'm gonna change the dates. All done now. So, and as you can see so far, price came into that extreme premium zone, mitigated it. If that key level is going to work, we're going to be looking for to see a potential 30-minute shift to market structure. And so far, as you can have it right here, 30-minute shift to market structure. And then this right here was the last move to the upside before displacing to the downside. So take note, today is Wednesday. If we're going to go to the downside, high of the week would have been created between on Monday to on Wednesday most of the time. And today being Wednesday already, as you can see, price created a high on Tuesday. You're welcome. So after creating the high on Tuesday, you can see what happened. Displacement, broke structure, leaving inefficiency. So this inefficiency would be another key level where I'll be anticipating to see a potential move to the upside. If price comes in here and then we see a 4-minute shift in market structure to the downside, then most likely that could be an area that price could potentially reverse from and continue to the downside. So that is what I'm watching to see on the dollar, and I'll be watching this very closely. The next thing we're going to do, we'll look at Euro US dollar, what Euro US dollar is doing as well. I'll use a fresh chart for this one. So for Euro US dollar, you can basically see that from the range high to the range low, this is our extreme discount zone. And price came into that extreme discount zone. After that mitigation, we saw a huge impulse move to the upside. So what we are looking at to see now is whether this is going to be an area to facilitate a potential continuation to the upside. Already within the range high, range low on the weekly time frame, we mitigated the extreme discount zone. And then this is the next drawn liquidity. If we're going to go to the upside, this will be my next drawn liquidity. So if we're measuring from that high to the low, you can see right here is our extreme discount zone as well. And you can see as well how nicely price mitigated the extreme discount zone. This last down close candle resting right here before an expansion to the upside. This right here, if we do see a 15-minute shift to market structure from there, now we'll be looking for a potential reaction from there. And so far, as you can see, price came in there, created a high, created a low. We broke structure very nicely. After a break of structure right there, if we go to 30 minutes time frame, go to 1 hour time frame, you can see a very clean inefficiency resting right here. We mitigated the inefficiency. After that mitigation, what next did we see? Expansion to the upside. Now we'll go to 4-hour time frame. We want to see clearer another key level price could potentially retest to. For some reason my trading view is hanging, So let's just give it a second. Okay, perfect. Now, as you can see, so far after this mitigation right here, we expanded higher, displaced to the downside, went to the upside, mitigated this inefficiency. So let's look at 3-hour time frame, 2-hour time frame. So if we're judging from what we saw on the dollar, this is the inefficiency. Well, personally, this key level can work, but personally, because the dollar hasn't mitigated the inefficiency yet, which means there could be a potential run on sell side liquidity. And right here, 7 a.m. this was 7 a.m. current time now. So 7 a.m. this low right here could be a suspect. So I want to see whether there's anything significant resting below that low. So after this high low break of structure, retest, expansion, the only other key level I can see an inefficiency is here. This is the only other place I see an inefficiency. Let's look back at what the dollar is doing. On the dollar, this right here, this right here is the inefficiency I'm working with. From our current price action to that zone, 0.11. From current price action to 0.11, probably around here. So maybe price is not going to come as deep as this key level, but if we go to 1 hour, there isn't really much to work with except the fact that price could come in here. But personally, if I'm to buy euro, I would like to see a run on liquidity first before jumping into any potential buys. So let's look at other time frames to see what we can find. So you can see right here, 5-hour time frame, we have inefficiency here. Let's go to 6-hour time frame. Nothing there. 7-hour, 8-hour. So potentially we're going to be anticipating to either see price come. So now, as you can see on the 8-hour time frame, we have a very significant high here and a significant low here. If we use this Fibonacci from this high to this low, make this a different color, green. If we are to buy, we'll prefer to buy inside this key level. So this would be a potential area. Stop loss the low, 36 pips. Take profits to potentially continue higher. So I'm not going to set a limit order on this right here. I'm not going to set a limit order, but this is just an example of how I would place the limit order if I was having very busy schedules that doesn't allow me to be on the chart 24/7. Personally, I'm on the charts 24/7, so I'll be watching this very closely, and the only thing I need to see is for price to come down here. If I see price come down here and I see a 5-minute shift of market structure, I will potentially look for a buy for this to continue higher. And If I'm buying this right here, I'm buying it with the anticipation for it to run this buy side and even potentially run this buy side as well. So it will be me buying it to continue higher, to even run all these buy side liquidities and continue higher. That's the only thing that will make me buy euro US dollar from where we are right now. So that is what I'm watching, and if I do see anything other interested in this one, I'm still gonna share with you all. So that's my analysis. So the next one we're going to be looking at, what Aussie dollar is doing as well. Aussie dollar kind of surprised me a little bit, even though I'm also not so surprised, but at the same time it kind of surprised me a bit because I was anticipating to see whether Aussie dollar is going to come down to the discount zone. So if we're watching from this low to this high, this is our discount position, and we have this inefficiency resting at the discount. So you can see the blue line right there is the discount position. But Aussie dollar went to the upside to buy side liquidity, went to the downside, and then reversed again, going back up. I know this key level is the overall drawn liquidity, but I expected price to revisit the discount level one last time before an expansion to the upside. But as you can see, price doesn't really have much patience or much momentum to come down any further. So it was really satisfied, and coming down here was to take out all the stop loss orders, all the people that bought in early from here, throw their stop loss to break even. The market came back to run them out and continue higher. So as you can see, they all got wiped out. And if we're measuring from this low to this high, this is our extreme discount zone. And look how price literally came down to an extreme discount zone, came back down, took liquidity, and then eventually broke structure, significant structure on the 1 hour time frame. I don't know how I didn't spot this, but it's just because I was just too clouded by looking for price going down to the discount level and the weekly inefficiency mitigating it. I really wanted to see that happen, but eventually you have to understand that it doesn't really matter what we want to see the market do. It's all about what the market is showing us. And right now the market is not really showing me anything significant for it to go down. I prefer buying this than selling it. This is why sometimes I really don't like to counter trend, because you can say this is gonna sell from here and you start selling it and it just smashes through because we're overall bullish. But if someone is looking for opportunity to buy it, and every opportunity they see to buy it, you bought it here, it took you out. You bought it here, it took you out. You bought it here, it took you out. You bought again, it took you out. And then you bought this. This right here will make up for all these losses. Let's say you took a loss here, 1, 2, 3, and 4. This right here is already more than 1:4. So if I had taken this trade, let's say my entry is here and my stop loss is right here. This is already 1:3.3. So even if I lost 4 times buying it here, I'm almost at break even. It's just about 0.7%, and I'll be at break even of losing 4%, and just one trade I'm already up 3.38%. I just need about 0.62% and I'll be back at break even. And if eventually smashes this high, that's literally a 1:5. A 1:5. So it will break even and I'll be up 1%. So this is why it's essential to really focus on just the overall trend. You can take losses, which is normal in trading, but eventually all you need is just one win and you're back in break even, and another win and you're in good profit. So you can see it's really a very simple trade. For some reason I didn't get in on the trade because I was thinking it was going to come a little bit lower into this position. But at the end of the day, one thing to take note from this trade setup is the fact that nobody knows what the market is going to do. Nobody knows for certainty what the market is going to do. Eventually, as you can see, this is the low resistance liquidity, and price is eventually going to take these highs. Whether we like it or not, these highs are going to go. So that is what I'm watching on Aussie dollar. Potentially after we take these highs, coming into this position. I'll be looking for price to come down for a retest, and I'll be looking for the key levels it's going to come down into for a retest, and potentially we can take the opportunity and still continue buying it. Overall, we still remain bullish Aussie and bearish dollar. For the dollar, I don't like the analysis on the dollar, to be honest with you, but for some reason dollar can still go to the downside because all the numbers that came out all came out negative, but for some reason the dollar kept edging higher. I believe the dollar edging higher is just inducing more and more liquidity to the downside, because here low resistance liquidity, and then here more liquidity here, and so many traders are going to be buying the dollar and selling the euro massively, and anything can happen, and you can literally see a huge displacement to the downside to run all these sell side liquidities. That is 100% possible, and I wouldn't be surprised to see that happen, because all the data that came out last week on the CPI, they all came out negative, but for some reason the dollar kept going higher. So I believe it's going higher to run buy side liquidity, induce more buyers into the market, and eventually wipe them out and continue lower to run the sell side liquidities. So that is what I'm watching to see. Potentially, it doesn't really mean that's definitely going to happen, but it's just my analysis, and I'll be watching it very closely. So the next one we're going to look at is we're going to look at USD card. Personally, for USD card, I'm not going to sell it or buy it. I don't like the structure. Overall, on 12-month time frame, market structure on USD card is bearish, so anything can happen and USD card could tank. So on the intraday levels, it's still bullish, creating higher highs and higher low, high highs and higher low. So it can still continue to the upside. It looks like it wants to continue to the upside. That's my opinion. It looks like something that still wants to continue to the upside, but eventually 12-month time frame is showing me bearishness, which is my only concern. And if I want to trade it, I want to see a significant break of structure to the downside, and then I focus on selling it. That would be a much better trade setup for me. But if I don't see that, I'll just rather be on the sidelines. So let's take a look at GBP/JPY. GBP/JPY has been in a consolidation for a very long time. This is one of my favorite pairs, but for a very long time now, I haven't traded it because I don't like the structure. You can see I wanted to see a daily break, but it hasn't even formed any daily structure. So my opinion, I'll rather be on the sidelines than put money on the line for GBP/JPY. So we'll take a look at US oil. US oil came down into our point of interest, didn't show us our entry model, so we didn't take the trade, but eventually played out very nicely, delivering an outstanding 9,000 pips. That is absolutely phenomenal. So but we missed that one because we didn't take it, and I don't really like to just jump in with market execution on a trade that I haven't seen my setup, and it didn't really set up for me to buy it. There wasn't any break of structure on 5 minutes or whatever. None of that was present. It just created a low, a high, low, and then high, low, and just continued higher. So it would have made more sense for people who were investing in it, because that would have been come in here, you don't need to see a break of structure, you just start to accumulate. 73, you accumulate. 72, you accumulate more, and here you accumulate even way more, and now you're in profit. So this one we missed out on it, but it's all good. It's all part of trading. For gold has been in a very long consolidation, which is very frustrating for a lot of traders that do trade gold. Me personally, I'll only put my money on the line on gold when I see price run this sell side liquidity. This is a low resistance liquidity, and I'll only be interested in buying gold once I see this low get taken. I'll start to buy it again to continue to the upside. So that is my analysis on gold. So we take a brief look at the pound. So for the pound, you can see how on the weekly time frame we have this inefficiency resting right here on the pound, and price mitigated it 1 to 3. We want to see a 1 hour break of structure to the upside for us to be bullish on the pound, and so far we have not seen any 1 hour break of structure. We only saw this low high, failed to create a lower low, created a higher high, and then failed to create another lower low. created a higher high. So I'm personally not going to be buying this because I don't like the structure. But if eventually price decides to come to the downside and then break a 1 hour structure, that is when I'll be interested in buying British pound US dollar. So that is my analysis on British pound British pound US dollar. And the next one we'll have a look at British pound Euro pound. We'll have a look at Euro GBP. So for Euro GBP, I said I wanted to see price come up here. And for price to do that, once we see price come in here, I'll look for a shift in market structure on the 15 minutes time frame. And as you can see, it's already outlined on my chart. And here, mitigating the discount, the premium position. If we can see that, that'll be incredible. From there, we'll look for a trade sell setup for this to continue to the downside. So that is my analysis, and if you do have any questions, feel free to drop it in the chat. The next one we're going to be looking at is Ethereum. We already have a trade idea on Ethereum that was shared with the members this morning, and I'm going to explain the reason why I shared that trade idea with the members. So I'll do a top-down analysis for you to understand why I'm bullish on Ethereum. So far, first thing first, we look at the overall market structure. So you can see market structure is bullish, creating higher highs and higher low. You can see that very clearly. And after we created this high, you can see right here, you can see how price still mitigated it and then created a higher high, higher low. You can see how price mitigated this position. We go to weekly. Already everything is showing us bullishness. On the weekly, you can see created a high, a low, and right here we broke structure. We go to the monthly time frame. Right here, inefficiency. Price came back down, mitigated the inefficiency. We want to see 1, 2, 3, 4 hour break of structure to the upside after mitigating the inefficiency. And right here we'll have a high, have a low. This is the high. We want to see price mitigate this high, break structure and mitigate the high. That's all we want to see. And as you can see, very nicely we mitigated it. This right here is our entire point of interest. All we want to see once we're in there is a 15-minute shift in market structure to the upside, and right here we'll have a high. Make this a different color, and we'll have a low. Break of structure, you can see that evidently. And after the break of structure, you can see right here, this is our new key level. Buy zone, this is where we're going to be buying from. So if I want to invest in it in Ethereum, this is the price I'll be invested in Ethereum. If I want to trade it, this is the key level I'll be trading it. You can see how simplistic this is. I didn't try to make it complicated. Now if I want to set a limit order on this one, this is where I'll set my limit order. Once price is in here, I want to be activated. First entry, stop loss, just a few pips below it. It's okay by me. Take profit position, all-time high. One is to 13. can see that. So right there, this is my first entry, and I'll be waiting patiently. Once price comes in here, I'll be waiting in the smaller time frame. Once we're in here, I see a break of structure to the upside on the 3 minutes time frame. I'll look for a buy to continue higher. This is how I'm going to get my re-entry. This is first entry. This is going to be the second entry. Makes sense? So that is what I'm watching for Ethereum. We already have a limit order right here. And once price comes down, we're going to be looking for a re-entry into the market, second entry, and if the market allows us to have a third entry as well, we're still going to do that. But personally, I like to stick with just having 2 entries, the first one and the second one. So that is my analysis on Ethereum, and if you do have any questions, feel free to drop it in the chat. In the next live stream, I'm going to also go through my analysis on Bitcoin, and I'll still share with you a few other cryptos that I'm watching very closely. These are going to be low cap cryptos. They have huge potential for growth. They could literally do like 50x, 100x, or they could go to 0. So it's just high risk, high reward. And they're not really investment where you put your life savings in. They're investment, you throw a little bit of money into it. Money you know you don't need, and you can't be bothered if you lose it, because these are coins that can easily go to 0, but they can also easily go to exponential highs. So I appreciate you all for tuning in, and I'll talk to you all in the next live.